Hey everybody, my name is Brandon from thestockstudents.com, and today we're going to be going over Xpeng stock, ticker symbol XPEV. What we're going to do first is we're going to go into Google to see why Xpeng stock has lost over 40% of its value in about a month's time. And then we're going to go into the balance sheet to see if Xpeng is actually an investable company and to see how the company is doing overall. And then we're going to go into the trading charts to see if we can find a place to buy Xpeng if we want to buy Xpeng. So now let's get started. So let me first try to explain to you guys why Xpeng stock has lost over 40% of its value in a month since its all-time high on November 23rd. And the real reason is not really because of anything on this side of the graph here, it's really on this side. So since November 2nd, in a little less than a month, we gained over 240%, which is amazing in such a short amount of time. So this is actually pretty common with a lot of the newer, more exciting companies. A lot of the new investors want growth and they are willing to pay a lot for it. So that's what really happened along the way up to $72 here, is that a lot of the new retail investors wanted opportunity for growth. They wanted an opportunity to find the next Tesla. So they found Xpeng and they bid it up all the way to $72 at the all-time high here. But then I think what happened was that people started looking at this number down here, and this number is the market capitalization. And this number is the market cap of today's value, which is 40% lower than what it would have been at the all-time high on November 23rd. So basically, people started asking, why are we valuating Xpeng at nearly $33 billion when what they're taking home is a loss of $1.15 billion? Now, there are reasons to assign a good and expensive market cap to Xpeng, but I think that $33 billion plus 40% to get back to this market cap up here was a little stretched. And I think that's what other people thought too, which is why they started selling the stock. I'm not saying that Xpeng cannot get to that market cap eventually. I'm just saying that right now, I don't think Xpeng deserves a 33 billion plus 40% market cap. So this is Xpeng's most recent balance sheet. As you can see, it was released on September 30th, 2020. What I'm going to do is I'm going to put a link to this in the description below. So if you want to follow along, you can follow along. What I'm going to do is I'm going to mostly focus on these three columns here. The reason for this is because they give you a year-over-year view from September 30th, 2019, and a quarter-over-quarter view from June 30th, 2020. So first, let's take a look at total revenues, which is this line on the balance sheet. And what we're going to do is we're going to look at quarter-over-quarter and year-over-year growth. And as you can see, compared to this current quarter, we are seeing astounding growth from Xpeng. This is a quarter-over-quarter, this is over a 230% increase in total revenues, and year-over-year, this is more than a 340% increase, which is astounding for a company. It truly amazes me how some of these companies can grow this fast in such a short amount of time. As an investor in Xpeng, this is exactly what you want to see, because this is money coming into the business, and this money coming into the business is accelerating. So now that we've covered the fantastic growth rate of Xpeng revenues, now let's take a look at the cost of sales here. So let's see how much Xpeng is spending in order to increase this total revenues over here. So if we look at this, your first thought may be, wow, have they ballooned the costs of sales? And yes, they have. But like I said before, in order to make these cars, you really have to spend money. So this is what Xpeng is doing. They're spending money in order to make these cars sales here. So even though these numbers do tell you something, that's not really the place you should be looking. Where you should be looking is this gross loss line over here. So what this is that it's basically a subtraction between the total revenues, how much money you made, minus how much money you spent to make those profits. So if you look at this current quarter, it's actually positive. This, because it doesn't have parentheses here, this is a positive $91 million RMB that Xpeng is gaining. If you look at just last quarter, they were losing money last quarter. They were only losing 16 million RMB last quarter. And if you look at a year ago, they were losing 45 million. So what this is telling me is that Xpeng is really ironing out these inefficiencies in the business in order to increase margins and in order to capture this fantastic net profit, which is amazing to me. Like I said again, that this company can do so much in such a short amount of time. So if this was the end of Xpeng's balance sheet, then I would say that Xpeng is doing a pretty good job. They are growing revenues from this quarter compared to year over year and quarter over quarter, while controlling the cost of sales so that they are able to capture this gross profit here. Unfortunately, this is not the end of the balance sheet, and there are other expenses that are involved with running a business like Xpeng. And if we scroll down here, we can see what that is called, and that is called this operating expenses portion of the balance sheet here. So operating expenses are normally divided up into two categories. One is research and development, this line here, and SG&A, which is selling, general, and administrative. This is like the back end office. They use it for paying for advertising, accounting, or I don't know, when a high level boss wants to eat sushi for dinner. What we can see is an acceleration of this SG&A expenses. And this is having a huge impact on the loss of operations. So what this is basically our gross profit here minus this total operating expenses here is how you get this loss from operations. So as you can see, year over year and quarter over quarter, we are accelerating this loss from operations, even though we have a good growth of gross profit. So this is not exactly what you want to see as an investor in Xpeng. So you can actually learn a lot about what Xpeng is doing by studying this loss from operations line here. You can see that the cost is increasing because of research and development. They are spending more year over year and quarter over quarter, and that's actually okay to me. If I was an investor in Xpeng, then I would be okay seeing this, because this basically means that Xpeng is really investing in its future. They are investing in the technology to try and stay ahead of its competition, which will help them maintain their incredible growth rate. So like I said, I'm not too concerned with the increase in research and development costs. The only real risk you have to consider is that, some of this money may not see a return on investment because, well, this is science and science doesn't work 100% of the time. So even though research and development costs are going up, I'm not too concerned about that. But the real thing that concerns me about Xpeng is this ballooning of SG&A. So I don't really like seeing companies pouring money into SG&A, mostly because that is money that I don't think is pushing the technology to the next level. This is just stuff, like I said before, like accounting or advertising, that is not really helping the growth rate of the company in terms of a technology point of view. They may be able to get more sales from this, but I don't think that the return on investment on SG&A is as much as it would be if they invested it into technology. So even though that selling, general, and administrative expenses is important, I would like to see more of that money be put to research and development rather than, a boss's sushi dinner. So now that we've got the boring balance sheet stuff out of the way, let's hop on into the stock chart to see if there's a spot where we could buy Xpeng if we want to buy Xpeng. This is on my website, thestockstudents.com, and there will be a link in the description below. So the first thing I want to talk about is the 50-day moving average line, which is this blue line right here. So what this is that at every point of the line is averaging the price of the past 50 days. So this is normally a nice either support or resistance level for the stock. So if the stock is above the line and is moving downwards, it normally likes to bounce back up from the 50-day moving average, or if it's below the line, it normally likes to hit its head on the 50-day moving average and then move back down. So of course this is just a technical analysis, so it's not a hard and fast rule that a stock has to do this. It's just a trend that we've seen in the past and that some traders do trade on. So now that we've talked about the 50-day moving average, let's talk about the support and resistance levels, which I think is a more reliable and real indicator than just looking at the 50-day moving average alone. So here I'm seeing a nice support level where we are at right now, actually around this $40 mark, and I see a little resistance level up here in $50. So as you can see here on the way up, Xpeng did make a little stop here at $40 for a couple days, and what this is telling me is that there's really kind of like an equilibrium at this $40 level where the buyers are kind of balanced with the sellers. So here, because the price is about the same, there's about the same amount of buyers and sellers at this price level. I also think that around this $40, $42 price range is a support level, because as you can see from the top that Xpeng was making, it came down all the way to $42 and then bounced right back up. So, because we're at this $40, $42 range right now, it could bounce back up to $50 again, but if it breaks the support level, I think it could come all the way down to $32, $30 range. So just to cover the other major technical indicators, we can see in the MACD, to me, it doesn't look like it wants to bottom out. So because of that, it tells me that the momentum is still downwards on Xpeng stock. So the next technical indicator I like to look at when making a decision to buy or sell a stock is the relative strength index, also known as RSI here. But in this case, the RSI is not telling me that much because it is between 40 and 60. So that is telling me that Xpeng is not overbought and not oversold. So because of that, in this case, the RSI is not really telling me anything useful. So what would I do with Xpeng here? I like the growth rate that Xpeng is showing, but I think I would want to wait until Xpeng is showing more control on the costs, especially with the SG&A expenses. If I was trying to short-term trade the stock, I think you could put in a little bit of your money, maybe at $40 here. I like to try and get at the bottom of the range because I like to save myself a few percentage points. I wouldn't put your whole position that you're trying to make at $40, I think, because like I said, if it breaks this $40 level, it's coming all the way down to 31. So I think maybe, a quarter of your position, half of your position maybe at 40. And if it comes down, then I would buy more as it goes down if you want to short-term trade a stock. So at this point, I don't think I want to be a long-term investor in Xpeng, mostly because they haven't shown control of their costs and expenses yet. Even though they showed a gross profit, they haven't showed a net profit. So they still are not making money. And because there's also a bunch of political risks out there that could cause the Xpeng stock to go lower. So that was my review on Xpeng stock. Let me know what you thought of it in the comments below. And if you have any suggestions on what you want me to cover in future videos, also drop me a comment. I do try to read all the comments, and this video was actually suggested by a viewer from my Alibaba video. So if you haven't already, please subscribe. If you like the video, please like the video. And as always, thanks for watching, and I hope you have a great day.